Welcome to Envisioned Broadcasting, the station designed to encourage, equip, and empower you for growth and success. Presents Women Emerge with Melissa Lambert, a show that shines a light on spiritual growth, health, purpose, and financial education. It's time to emerge and begin to live out your dreams, walk into your destiny, while making a difference in the lives of many.
Welcome to Women Emerge with Melissa Lambert. I am your host, and I know y'all hear me smiling from this phone because this is going to be an amazing show. I am excited for the guest that is on today. I promise you're going to get some information. You're going to have a smile on your face. This man is going to keep you on your toes. I promise you. But just before we get started, just want to remind you that the show is being sponsored by Lambert Legacy Financial, powered by Core Financial Partners. We believe and we aim to teach the truth about money, engaging individuals and families to think about and plan their legacy. Our focus is our family, fun, and our future legacy. This show, y'all, will introduce you to leaders, experts, and motivators who share their journeys and their stories through personal and professional growth, knowledgeable tips, and lessons learned that will empower you to grow. It is time, y'all. It is time to grow your mind, your spirit, your brand, your business. And yes, today we're going to learn about our finance. And today's show, I have a special guest, and I love him dearly. He is a IBC. If you don't know what IBC stands for, it's Infinite Banking Concept. He's a practitioner of the Nelson Nash Institute. He's also a licensed financial consultant of Core Financial Partners with Core, we call ourselves our COREpreneurs with Core Financial Partners. He is none other than Mr. Harold Johnson. Mr. Harold Johnson out of, I'm going to say Orange, New Jersey, because that's what I remember him out of.
Flip it, Scotty. You better say Orange, New Jersey. Tornadoes.
Listen, I told y'all he's going to have y'all on y'all feet now. Welcome to the show, Mr. Johnson. Welcome, sir.
Melissa, thank you for having me. I'm so excited. I got a seatbelt on the dining room table chair right now, keeping me in place, but ready to take off. I'm so excited finally being on your show. I know you had promised me, and I was trying to get my act together, but you finally got me on. Thank you so much.
You are so welcome, and it's truly an honor to have you here. And I know a little bit about you, but I don't think the world knows who Harold Johnson is. So let them get a little peek of who is Harold Johnson.
Well, thank you so much. I'm a Jersey guy through and through, and I live up in Essex County in northern part of New Jersey. Right outside of Newark in a little town called Orange, New Jersey. And I've been settled in with my wife for 21 years here. Have 5 grown children, 1 deceased, but we have 2 grandchildren, and we're all about family. And that's what really motivated me to have that aha moment when I was deciding to retire. I had worked a whole 40-something, 50 years. And as my mentor, Tony Chamley, would say, what happened to all my money? It was really a aha moment to sit down and step away from things where you having a cash flow to where you had to make a decision on how you're going to settle in. And then you start thinking about legacy, whether you have one in place or one you can have in place. And it was eating me at the core that I had worked a whole corporate career and so forth, and had no idea that I was going to have challenges to restart my finances all over again versus me building on something that I thought I had in place. So in a nutshell, at age 49, I took out a 20-year term policy. and I fell in love with buying term and invested different. So I was really socking away money in the 401k situation and skating along, cruising along with my term policy. So it was almost like inevitable. Like a couple of weeks after I went in my boss's office and told him that I was retiring, little did I know I was going to get a letter from the insurance company and saying, okay, we would love to quote you again another 20-year policy at such and such dollar amount, but your current term policy is expired. And I was thinking, that's my legacy money. I have to start all over again with that chunk of money just disappearing like that. And I was really sold on that. And then to make matters worse, I had stepped away from my political position in town, and I had a stipend for that. We walked away from that. I walked away from a full-time job with retirement. I was going to get, Social Security and some pensions from being a baby boomer. We still had pensions back in the 70s and 80s. So we was looking at that. But the big thing, we was heading into the first year of COVID. And I had to go into HR and sit down with HR and take a look at my 401k, and it was tanking. It was at that moment, man. I was like, whoa! Not only did I buy term and invest the difference, now the invested difference was tanking, and it was an aha moment for me. So luckily, Joe Biden came in and instructed the IRS to put out the mandatory age that somebody would have to take out of deductions, because I would have had been withdrawing money and paying taxes on my money as my F401k was tanking at the same time, leading into my first year of retirement. So that was the challenges. So
wow.
Yeah.
That's a big challenge, though, when you think about it, working all these years and then, you're ready for retirement, but you're like tax all this money. But so I want to ask you, because, hearing what you shared about buy term, invest is different, and now you transition into the financial consultant arena. Being a graduate of the Nelson Nash Institute, we teach the opposite. So what even got you even started to wanting to know about the Nelson Nash Institute, wanting to know about infinite banking, wanting to even know about Core Financial Partner? How did all that come about for you?
Well, I'm a believer, so I took it to prayer, and I just trusted the Lord was going to lead me in the right direction. I was really thinking about not necessarily me anymore, but whatever money I could salvage up from the 401k, and that situation. I was just thinking about taking a chunk of money and buying some burial expense insurance, some final expense insurance, and this pay for my funeral up front. So that one burden heading into, I guess I'm making it to my 80s or whatever, but my wife wouldn't have to worry about that. That would be taken off the table. So I started looking for that, and lo and behold, the algorithms on YouTube put Nelson Nash's video in front of me, and I clicked on it. And I listened to this man. He opened up the video with a prayer, and he started talking about how to become your own banker. And I stared at the screen. I couldn't believe what I was hearing. So, of course, I watched the video twice. And right after I got finished watching the video, I went on Amazon and I bought his book. And they kind of delivered it like in 2 days. And I've been running ever since.
Wow. And I can tell you that book that you're talking about, Becoming Your Own Banker, is a book that I keep in front of me every single month. The more you read it, the more you get more information from it, and it's like something new every single time. So let's dive in, because I know that this is going to be a fully loaded show, and I am so glad that you have your seatbelt on that side. I think I needed to get my seatbelt too, because this is going to be a ride that's going to be a little bit bumpy for some people, because, we all heard and know about the 529 plan, but, a lot of people are just getting about to understand what infinite banking is. So let's go deeper into what is a 529 plan, and how is it typically used for education savings?
Sure. Okay, let's dive right in. Uncle Sam is a wonderful government that never shies away from providing a solution for a problem that's caused by them. It's right in the Nelson Nash book. Whenever they create a problem, they always create some type of financial solution that everybody can become a consumer and buy into it. And the number one problem that causes all this is the cost of higher education. So they had to come up with a solution. So we got that happening. The bottom line, the cost of legislation, the cost of education is going through the roof. Comparing 2023 and 2024-25 academic years, tuition rates at a private university has increased 4.2% over the past decade. The cost of college has been rising around $500 per year after inflation. They report that the average total cost a year of college has increased more than 125% between 1963 and 2022. So people have a need for saving. That's the bottom line. It's about the rising costs and having savings.
Wow. I mean, and when you think about it, they got to think about tuition, different fees. They got to think about books. They got to think about room on board. They got to think even if they're going to be eligible to get into the institution. So there is so much that a parent has to think about when it comes to education. And those numbers just alone, it has increased so dramatically. And that's why I feel like many people, you said something that is so powerful. The government will create a problem and they will find a solution which comes out of our pocket to solve their problem. Like, that is so true in just every area of how we roll, in every area, right? So the funds must be used for, but, you know, within the 529, when you're saving a 529, can you use those funds for any other things? Like, can you use it to buy a car? Like, what is that when people are saving the 529 for education savings? Can they use it to buy a car to drive themselves to school? Like, what is those funds a la carte to?
Those funds are really restricted, and I think you have another follow-up question that goes into that area a little deeper. But the major thing that we have to be concerned about with the 529 is the way they're designed and the restrictions and pitfalls. You can be actually doing your thing with 529 for a good number of years and to slip up and make a wrong decision, because there's federal tax benefits that some states honor and some states don't. And each one of the 529 plans are a state plan. So you can literally have something hung up in knowing the state law versus the federal law when you make a move when you're doing your distribution.
Interesting. So we're talking about the 529 plan versus the infinite banking concept. Before we get into the next question, we want to make sure everybody understand what infinite banking concept is. So in a nutshell, what is infinite banking concept?
Infinite banking concept gives you a liquidity, use, and control, and you own the contract. So you're a major player and partner with a mutual insurance company. That is the platform for you to be using the funds in your cash value as a bank. And therefore, not only do you have the business of being employed and earning income that way, you actually can use your IBC policy as a banking mechanism to distribute and deploy money to make money.
Wow. I mean, I just love how you just explained that real simple, because a lot of people don't really grab the whole of that concept, but the way you just explain it, truly liquidity, use, and control, and you control that contract. So how does the infinite banking concept, Harold, is differ from the 529 plan in terms of flexibility for using the funds?
It's a really big difference because by the plan structure itself, when I'm talking about a 529 plan, there's certain limits and guidelines the way the brokerage firms and the IRS have it set up. So you have to be very mindful in of the restrictions that you have. You don't pay taxes on your contribution, but you pay taxes on the earnings. And it's no in a 529 plan, you can sock a lot of money in it because it's after tax money. But then again, say if you have it on a younger child, you have somebody else controlling that money for a good number of years, whether it's the brokerage firm, the fund managers, or the funds themselves that's annually generating fees and fines and everything else for somebody else while you're sitting there home twiddling your thumbs, hoping that the index is really going up. But when it comes to cash value whole life insurance policy, there is guarantees, because the guarantee side of your IBC policy is underwritten by the insurance company, and once they sign off and you agree to what they agree, the only thing that's different is as long as you're paying them premiums, everything in that guarantee column has to happen. It has to happen. It's by contract. And also, when you want to expand on your IBC policy, you have the features in your dividend sections, which they say, we tell our clients dividends aren't guaranteed, but the insurance companies that we use have a proven track record of paying out dividends for hundreds of years. And that dividend actually helps grow your cash value and it buys additional death benefit. And if anybody understands anything about permanent whole life, at the end of 120 years when it endows, the death benefit and the cash value is the exact same number. So your policy is growing year after year after year, to the point where you get really excited when you see you've already paid up enough premiums where you don't have to pay premiums anymore. And the policy is just growing.
Wow. I mean, it excites me when I hear you talk about both the infinite banking concept and just giving people clarity of the 529. Because when you think about the IBC, you having an IBC policy, you can borrow against the cash flow, like you said. You can borrow from the cash flow, and you can purchase anything with it. We're not going to restrict you, if it's through education, getting an investment, a business venture. They can do whatever they want when it comes to utilizing their IBC policy. But as you said, like that 529 is restricted to the use of the funds for qualified education expenses. And that's one of the biggest things, Harold, I think that we have to understand so much about this 529 plan. We're not here to knock, like you said, I'm not here to knock anything. We're just here to educate people on what's in front of them. So just let's get deeper into this conversation. So can you withdraw funds from the 529 plans? Because people, they're putting money in, but can they withdraw from that 529 plan for non-education expenses without penalties? And how does that compare to the using funds from our IBC policy in itself?
That's a slippery slope. In a nutshell, it's you can't. But in emergency, somebody would take the hit on the penalty or whatever and pay the taxes. They can't restrict you from doing that there, but you would be breaking, whatever's written in the contract for the plan. But no, it's geared towards education. You can actually do some plan rollovers or beneficiary change or direct transfers, which you move money from one state 529 to another state 529, or just indirect transfers, which draw funds from a current 529 plan and deposit them in a new plan within 60 days. I mean, as you actually take the cash, and you have 60 days to put it back into another plan. You can do those type of things other than the education piece for room and board, books, that type of thing. That's what they would refer you as saying taking it for other uses. But to take now IBC policy, if you, the imagination is unbelievable, because if you have an IBC policy on a young child and the child is like 14, 15 years old, and if the child comes to you and says, "Dad, look, I want a part-time job, or I want to do something like maybe buy a lawnmower and some weed whacker and some bags and some gasoline and so forth. Can we borrow from the family bank and set me up in business, and I'll pay the loan back?" That's possibility with IBC. And nothing's interrupted. The money and the cash value continues to grow. You get a loan from the insurance company at a very reasonable rate, and you can set your kid up in business all through their high school year. And after year 1 or 2, all the equipment is paid for, and they pay the loan back. And it's the imagination. You can't imagine what you can do with the IBC policy.
Yeah, wow. I mean, and I love, again, how you explain this is just truly unbelievable at times, because sometimes we hear information, Harold, and it's just like, we believe it without researching it. We believe it without getting the full knowledge behind what is behind it all. So, again, you are tuned into Woman Emerge with Melissa Lambert. It's always an honor and a privilege to come before you another Thursday. Happy Thursday, y'all. I mean, we are here with none other than Mr. Harold Johnson. He is an IBC practitioner of the Nelson Nash Institute and a financial consultant with Core Financial Partners. And we're talking about the 529 plan versus the infinite banking concept. And we just dived into really kind of 3 major questions, and we're going to just go directly into the next question. So what are the tax benefits of a 529 plan versus the tax advantages of infinite banking concept?
Well, Melissa, these strategies are different like night and day. Reason 1, to use a 529 plan, tax deferral and growth strategies. In essence, the 529 plan confers that the benefits of tax-deferred growth, like in an IRA or 401k. But with the added advantages of the taxes aren't due or on cash distribution. What I mean by that is once you use the tax, it's tax deferred, but once you use it to pay the bill for the college or room and board and things like that, you're not taxed on using that. Okay, so that's one of the neat things about, and that's one of the draws for the 529. But once again, those monies have to be dispersed properly for you to get that tax advantage. And that, once again, qualified educational expenses such as tuition, books, school supplies, and room and board. The investment growth in earnings are always tax-free when it comes to the 529. As you manage and grow your IBC policy, as it is designed and structured, it's never being subject to taxation because it's part of the insurance. There is no tax involved.
I want you to repeat that loud and clear, because I need people to hear that. Because, again, our goal is to stay away from these taxes, y'all. And there's a loophole which we found, which is called infinite banking concept. And I want them to hear what you just said about IBC when it comes to the tax deferred. Can you just say that one more time again so we can understand exactly what that means when you say, because, again, we want to confirm what are the tax advantages from the 529 and the infinite banking concept. What did you say about that advantage for the IBC?
Under the IRS Code 7702, when an insurance policy is properly set up and designed, it doesn't fall into any type of tax category, even after you accumulate your cash value. What we're actually doing is taking out policy loans. Even when you get to the point where you want to start using your cash value for retirement, you can actually just take out policy loans and not have to worry about the tax situation that way. But the biggest thing is the windfall, Melissa. When it comes time for the insurance company to pay out that big check for the death benefit, the beneficiary and the beneficiary's family doesn't have a tax burden at all, and they get the whole windfall.
The whole windfall. Isn't that amazing? I mean, just to know that your policy loans and, when this transition, it's literally tax-free, offering more really flexibility that we have when it comes to using our funds as well. So I love this, Harold, that we're having this conversation, because the more we know, the better we can do. The better we can actually take this information and say, you know what, I know better, I'm going to do better. So how do contribution limits differ between the 529 plan and the infinite banking policy?
Good question, because there is some differences, just the way the plans are structured. They specifically designed a dividend-paying whole life insurance policy with a mutual insurance company is key. The IRS does not set any annual contribution limits for a 529 savings plan. However, parameters for the life of the plans are set by the states that sponsor the individual 520 plans. Surpassing these limits could result in a hefty tax penalty. In my research on this, I did find out that 529 plans are very attractive to very wealthy people. Although they're marketed to everybody, they have clauses where you can dump in 5 years worth of contributions in 1 year, and people in the know to have financial consultants or have financial advisors know how to take those types of contributions and lower somebody's tax bracket, but yet and still dump money into a 529 in one lump sum of 5 years worth of contributions, and they just have to wait until year 6 before they can contribute again. But the average person that we're talking to on the show and on the air is looking at $100, $200, $300 a month in the contribution. So you seem that you never reach the max limit. You'd be able to do $8,000, $9,000, $10,000 or something like that annually. Whereas IBC, with it being an insurance product, is restricted to a certain amount. Number one, the parent has to have a life insurance policy in order to get a life insurance policy on their child, because we can go as young as 15 days old, starting up IBC policy on a youngin, and battalion, and you get the whole 17, 18 years of contribution when you start that young. So the insurance industry is not going to underwrite a policy or somebody putting $1 million insurance policy on a 58-day-old, and the parents don't have no life insurance. So there's certain restrictions that we have to abide by. But then there's certain ways you can structure the policy where you can get whatever your budget is, that's what you can get it in and make the policy work for you.
Wow. And you know what? I remember having this conversation with somebody yesterday. I'm actually going to be putting in about 5 illustrations for him and his entire family. And he said, "So, Melissa, how much would I start my bank with? Because we call it, start your bank, right?" And I said to him, "How much do you save in your traditional bank?" And again, you have a choice to your house and your money somewhere anyway. So whatever you're housing, how much you're already housing there, all you're going to do is move it here. And when I shared that with him, he was like, "Oh, that's smart." I said, "Yeah, because now you can take advantage of all the benefits that you've been giving away to the bank, and that's what we do, how when it comes to just our contribution to ourselves on a monthly basis, some people, save weekly, some people save biweekly, some people save monthly, but again, like you said, that contribution that we give to ourselves, it can give us greater results the way we structure it in the type of policy that we use through a mutually owned company. So, and I like when you said it gives a higher cash accumulation. And that to me is powerful because the way we structure it allows so many people to get that type of dump in that they need the first year and begin to grow their policy continuation. So again, you're tuned into Woman Emerge with Melissa Lambert. I get excited talking to amazing people, and truly, Mr. Harold Johnson is one of the amazing people I know out of Orange, New Jersey. He is a practitioner of the Nelson Nash Institute and a financial consultant with Core Financial Partners. And we're just having a good conversation about the 529. Aren't we? We just enjoying this talk about the 529 plan versus the infinite banking concept. And I truly believe that we all need to know, because we are given this information but not understanding there are options. So in the event, Harold, of a financial aid application, how do 529 plans and the infinite banking policies impact eligibility for financial aid?
This is a slippery slope here, because it causes some parents to start trying to hide money. When it comes to IBC, we don't go through those hoops. But what I forgot the name of the actual forms that the bursar's office at the colleges be asking you to fill out for financial aid to get a name to it. But anyway, all the parents have to go through that, and they have to declare their assets on it. So one of the things that you have a big wad of money or nice savings in 529. It's right underneath where you're saying you got equity and mortgage in your home, and whether or not you got stuff in the stock market. So it's included in the parents' overall assets, which is a liability when it comes to the student filing for scholarships and loans and so forth. But when it comes to IBC policy, that's a contract that child's parent has with the insurance company, and it's hidden from the government, and it's hidden from IRS, and it's hidden from anybody asking about, do you have insurance policy? It's not even in the discussion. So therefore, your child can literally have a nice nest egg set aside in the IBC policy and go after all the outside money they can possibly go after, because of your income limits.
Yeah, that makes them giving them more advantage for preserving any eligibility for financial aid. So I love how, I'm not sure if the plan is that paper called Expected Family Contribution, EFC. I'm not sure if that's what they use to calculate. Something like that. I think that's where they use it to calculate the financial, assets of the family. And again, they just want to be up in your business, Harold. That's all they want to do. You said what? I didn't hear you. Say it again.
Yeah, I said I was agreeing with you. They don't want to be in your business. Correct.
Mhm. Yeah, and that's why I love what we do and how we bring forth this information about infinite banking to the world. To everyone that is listening within our community and outside of our community here in the United States. We want you to understand there is a privatized way to do everything where you don't have to have your children. You basically, because you make so much money now they're gonna hold that against your child to go in and get the financial aid that they need. You know what I'm saying? So I love that we have another option, which is that infinite banking policy that can give them that access. And on the other hand, really generally do not count as assets, as you said. And, when it comes to the financial calculation for financial aid, it's not going to show up in that manner. So it's not going to not give them the eligibility that they need when it comes to applying. And when they have this type of policy, the way we set it up, Harold, they can use it as their own financial aid, right?
Correct. And like I said, the money in your cash value can be collateralized and deployed anywhere. And like I mentioned earlier about the possibility of setting a teenage son up in a lawn care business with getting a loan from the family bank, which actually the loan comes from the insurance company, and your cash value savings is still growing uninterrupted. The imagination of what you need to do. But we're not breaking any law by not disclosing anything. You just don't have to.
Nope.
Because it's an insurance product.
Yeah. And that's the plus, y'all. I mean, and when I really found out about this, I was like, wait, we get 3-in-1, we get savings, we get dividends, because again, we're working with a company that hasn't missed a dividend over 100 years, and you get life insurance. I mean, for the same price that I'm putting in my checking, in my savings account every month. I mean, that's like killing 3 birds with 1 stone, Harold. And I was like, sign me up, and not just sign me up for 1, sign me up for 4, because I have a policy on 2 on myself and 2 on my daughter, and I think that this right here is what really set people up. The infinite banking concept set people up for success. So when we dive into just thinking about insurance policy, that gives you beneficiary. When it comes to the 529 plan, Harold, can that be transferred to another beneficiary? And is there a similar option with infinite banking?
Well, there is, when it comes to the 529, they have structure within in the plan programs. There are certain things that you can roll over, and the most common is someone transferring either the balance or transferring the whole fund over to another child, and declare that other child as another beneficiary. And as I stated earlier before, that they have a plan rollover where you can actually roll over the funds into a Roth IRA, and you can also change the beneficiary, and a person can bypass their child if the child doesn't go to college or they have accumulated a substantial amount of money in there, and they can use that plan, that 529 plan, for a grandchild just by simply naming the grandchild the new beneficiary. So the 529 plan gives you those options, but the key is while you have no control over that money and it's sitting in the 529 plan, well, the happy players, the fund manager and the brokerage firm, they have access to your money year after year, drawing fees off of it while you contemplating what you want to do with it.
Wow. Whew. That's deep. That is deep.
They don't mind you at all pondering.
No, they don't. And with the infinite banking, the policyholder can, designate a beneficiary to receive their death benefit, but it doesn't have to be the same ability to transfer the account like the 529 plan. So, and I love the way that we structure everything. And what I like, I found out because, we saw what happened to Nelson Nash. He had multiple policies, over 40 plus policies, and
right.
he even made his church one of his beneficiary, right? He made, organization that he supports his beneficiary. And I like that it doesn't have to stay in the family compared to what you just mentioned with the 529. You can, change the beneficiary to another family member without penalty. But like with our policy as a policy holder with, through the infinite banking concept, you can make your beneficiary one of your organization that you support, correct?
Correct. Yeah, the key with the IBC policy versus the 529 plan, the major player in the 529 plan is the beneficiary. Now, when we're dealing with the IBC policy, the insured is the person that's going to receive the benefit from the structured policy, but the owner of the policy owns the policy. That's who's controlling where it goes and how it functions, the insured. And while we're on this point, because I just thought about this when I was doing my research, but wealthy people are intent about making sure that they take their family members off of the insurability platform. And what I mean by that, we procrastinate so much. Somebody may very well get their first policy like in their 20s, 30s, 40s, or 50s. It's imperative that we understand the earlier we start insuring ourselves, it takes our humanness off the insurability spectrum, where we don't never have to qualify for insurance again. And with a whole life and permanent whole life insurance policy, we're ensuring that we are insured for 120 years.
Wow.
And anything can happen between age 15 days old to God knows when. Anything can happen to us to change our insurability status and drive a premium up when we could have been able to get it a lot cheaper and saving more money.
I agree, 110%. I was telling a story on Saturday when we had our master class about one of my clients, at a young age, at 14, getting declined from being insured. They're not insurable because of not just his age, but because of his BMI is too high, right? That's why you said, the sooner the better. Because all these stuff comes in plays. Your weight plays a role. Your different issues such as diabetes, high blood pressure, high cholesterol, all those things play an issue about you being insurable for these coverage. So I like when you say that, anything can happen from 15 days all the way to whenever. But the sooner you insure you and get yourself coverage, the better. Because you're not just doing it for the sake of you, though, Harold. You're doing it for the sake of your family.
Correct. And legacy.
Just stop right here, right there. Legacy what now?
I said, so at 15 days old, if I take out a policy on a grandchild, I'm setting legacy in motion for that 15-day-old child.
Ooh, you just gave that person. You know how they say in John Maxwell, legacy get legs now. You just gave them some legs.
Yes.
Oh my gosh! And I just think about it, Harold. Like you actually went through a institution by a man named Nelson Nash, who has transitioned, but his legacy still lives on.
Lives on. It can't stop.
It can't.
Because the monetary piece is just one piece. They're teaching the family banking. The financial literacy goes along with the funds. It's unstoppable.
It's unstoppable. Wow, you are tuned in again, y'all, to Women Emerge with Melissa Lambert. And when I tell you, this man have been waiting, and I've been like running him down, and we've been trying to get each other to get him on this this podcast. He is finally officially in the building. He is a IBC practitioner of the Nelson Nash Institute, a licensed financial consultant with Core Financial Partners. He is the husband of a beautiful wife, Miss Carla Johnson.
Thank you.
He is none other than Harold Johnson out of Orange, New Jersey. And we are here talking about the 529 versus infinite banking. Oh, my goodness. Harold, this has been a good conversation. I am so loving it.
I've enjoyed it. Yeah.
Same here. So let's give them a last, let's close this in for them. So when we think about what levels of control do we have over investment options in a 529 compared to the cash value growth in an infinite banking policy, what level of control do we really have over that?
We have a lot more, and I'll try to explain it in brief. When it comes to the 529 plan, your control really is in the beginning stages when it's being marketed to you, because at that particular time they'll give you options on how risk averse you are and whether or not you want to have something like in a mutual fund that's equity that's very, very volatile or something like that. Or then they'll move you into a plan that may very well be volatile and aggressive at first, and as the child grows earlier and gets close to graduating from high school, they'll start moving the funds into a more conservative thing to make sure they're not losing that much. Really, to make sure they're not losing that much before the child graduates and you got something left. So they do that, or they give you the option to put something away, like in a money market account, where literally the money market account, you're losing because it's not even keeping up with inflation. So you've been money all those years, socking, and you have very little growth. You could have put the money underneath your mattress without all that restrictions on you, and it came out the same way. Once again, IBC is infinite. It's unbelievable what you can do with your policy.
And when you say that, you said it you said it earlier today. You said with guaranteed returns and no risk of loss as long as the premium are paid and the policy remains in force. Like, talk about that in a sense, because just imagine you saying the 529 plan depends on the market performance. So it can give you that risk of losing your money if the investment is underperformed. So now we have the IBC way. You're saying guaranteed returns and no risk of loss as long as the premium are paid up and the policy remains in force. So, I want you to dive into that part right there for me.
Well, as far as I had several policies, and it really hit home to me when I went to Nelson Nash Institute to study to become an IBC practitioner, because they really get you involved in the behind-the-scenes stuff with the actuators and the underwriters and understanding how policies are written, and talk about human life value and what people are worth, and that's another podcast, how we think about our human life value versus what the insurance industry, because the insurance industry may be looking at me saying, you want to insure yourself for $5 million? And I'm looking at my budget saying, I want $150,000. So we have to grow when it comes to that understanding of what our human life value is, but not to get off the subject. That's when I was taking a deeper dive into learning that, I had an aha moment saying, literally my policy is a contract. And since I have been contracted to get all these benefits from the insurance company, they're asking me just to make the premium payments. I already did the health life thing. You know, I gave them the blood sample and coughed into the little jar. And literally these people are saying, these numbers here in the guaranteed column will happen for you the way we have it illustrated if you just make your premium payments. And if something happens to you and you demise, your family will get this number in this column here on this particular day, guaranteed, without having to pay taxes on it. So wow. I'm really more excited when I see my stuff about the guarantee, knowing that the dividend column is just gravy. But the dividend column is going to grow and accelerate that death benefit. And if I live to 120, it's going to endow with both them numbers being identical. You know?
And that's a power. Wow. That's powerful.
Yeah.
I mean, and when you say it's gravy, that's what it really is. Like, you're getting free money, like surplus of over what was kind of overpaid in a way in the policy. You're getting that back to yourself compared to leaving your money in a traditional bank. You ain't getting nothing from it, right?
Correct.
So as we wrap up now, because I want to kind of throw this last question in for you, can both a 529 plan and infinite banking be used to leave a financial legacy? And if so, how do their legacy building potential differ?
Lisa, I had a rough time with that question. Because I was trying my best to find some kind of way a 529 plan would leave a legacy. And it's possible, but like I said before, the 529 plan was really designed for people in the higher income brackets that can sock away large sums of money and not worry about the volatility of being in investment accounts. Okay, not your average Joe Blow that like myself that wanted to sock away $300 or $400 a month. But biggest thing when we just touched in, the 529 doesn't have a death benefit. It doesn't have anything that can quadruple the amount of money that you put in it. IBC policy gets to around about year 5 or around year 6 starts being what we call efficient. It's almost like the money that you're putting in goes dollar for dollar into the cash value, and your insurance is all covered. And then when you get to the point where you have it paid up, and the policy is showing you zeros where they're not asking you for any money, and your dividends start hitting 4 and 5 digits in the dividends, and you're not putting another dime in this, it'll blow your mind. But the 529 plan will never have a feature as powerful as that in the IBC policy.
Wow. And that's what makes it so much different. It's so different because I truly believe the benefit that we have in itself, even the borrowing against the cash value during the lifetime of this, offering more control over our financial legacy, that cannot be done with the 529. So I thank you so much. I mean, this was so good, Harold. And
thank you.
I want you
to
You're welcome. You're welcome. And I said to him, Harold, don't have me on this podcast laughing, because when you get to know this man, you would not stop laughing, because just first of all, he's so tall. So just when he comes in a room, he owns the room by his height. Okay. So I was like, please try. Let's stay focused. And I'm so proud of you.
I'm so proud of you, sister. You putting it together, man. God bless your show, all the work that you're doing. You talking about super multitasker. That's you, Lambert Financial. So that's you. You're a super multitasker. And I love your energy. I love you because I'm still trying to take it down. Tony's not listening to me, but I'm still trying to take it down to be semi-retired. But now that I have my designation, I'm back out on the road again.
Yeah,
two trips to Florida and 2 trips to Maryland, like in 45 days. So
that's not semi-retired at all. You are out of retirement. Okay.
Yeah.
And you're doing great. So I thank you again. So how can we connect back with you? I know that you have your corefinancialpartners.com/Harold Johnson and your Facebook page. We know at harold.johnson.77312, which will be in our description. Is that the best way to connect with you?
Yes, it is. The core information will take you right to my profile page, and all my personal business phone numbers and emails and stuff is on there. Anybody reach out to me, I will send them an e-business card that will tie them not only to my personal information, but tie them right back to Core's platform and Core Financial Partners platform that I'm associated with. So I'm pretty excited about that. Yeah.
Awesome. Well, I thank you again. This has been an amazing show. Again, you are tuned in to Women Emerge with Melissa Lambert. It's always an honor to have such beautiful guests such as Mr. Harold Johnson out of Orange, New Jersey. He is an IBC practitioner of the Nelson Nash Institute and a licensed financial consultant with Core Financial Partners. We had a great time here talking about the 529 plan. Yes, we did, right?
Right. And I'm gonna win the next cash flow game too.
Oh, you know what? Please put that down because guess what? I won again this past Friday, but I had to give it to my niece and my niece over there because she was like, Auntie, you can't win because you're not a kid. I was like, okay. So, but I am going back again on this Friday, and I am going to reclaim my crown because I'm playing again. So I'm not. You're not beating me. I'm sorry. Okay.
Okay, we'll see. I'm studying my cash flow YouTube videos. We'll see.
Oh gosh, y'all, listen.
I'm not paying off any debt.
No. Listen, this is it. We learn as we earn. So I thank you all again for tuning in to Women Emerge with Melissa Lambert. You can continue to follow me on Facebook at Melissa S. Lambert. That's Mellisa S. Lambert. Also at Lambert's Legacy Financial page. And you can always tune in every Wednesday at 5 p.m. Eastern Standard Time, every Thursday at 6 p.m. Eastern Standard Time. We are so thankful for you listening. And this podcast that you heard with Harold Johnson will be up on the podcast. All 13 top podcasts, he will be live on Friday morning. Just go to Women Emerge with Melissa Lambert on any of the 13 top podcasts, and you will see Harold Johnson's podcast there. So, y'all, thank you so much again, Harold Johnson, for coming on. I truly appreciate you, sir. It's been a pleasure for having you here. You are truly, truly welcome, y'all. And until next time, take care, take charge, and continue to be great. Bye for now.
Thank you for listening to Women Emerge with Melissa Lambert, where Melissa speaks with leaders, experts, and motivators who share their journeys and their stories through personal and professional growth, knowledgeable tips, and lessons learned that will empower you to grow. Follow Melissa and Women Emerge Network on Facebook, Instagram, and TikTok at MELLISASLAMBERT and at Women Emerge Network. And visit www.womenemergenetwork.com. Remember, when you know better, you can do better, especially when God is for you.